gotta talk into the mic. It'll pick you up from far away, but you'll sound pretty muffled. So I noticed some of the board members are in the habit of like pointing to and talking, but then they also push it away from you. So to whatever extent you're able to encourage people.
Okay. Pursuant to the Rehabilitation Act of 1973 and the Americans with Disabilities Act of 1990, any individual with a disability who requires reasonable accommodation to attend or participate in a meeting or function of the corporate board of directors may request assistance by contacting Oxford Preparatory Academy at 4740 Green River Road. Done enough? Keep going. The public, including public attending a teleconference location, are invited to address the board regarding items listed on the agenda. Comments on an agenda item will be accepted during consideration of that item.
Good evening. Welcome to this regular board meeting of the Board of Directors of Oxford Preparatory Academy, December 13th, 2018. Open session starting at 5 o'clock p.m., closed session at 5:10 p.m. or thereabouts, returning to open session at 6:30 p.m. The meeting location is Oxford Preparatory Academy, South Orange County Campus, 23000 Via Santa Maria, Mission Viejo, California, 92691. And the teleconference location is Oxford Preparatory Academy, Saddleback Valley Campus, 22882 Lumont Drive, Lake Forest, California, 92630. The public, including the public attending a teleconference location, are invited to address the board regarding items listed on the agenda. Comments on an agenda item will be accepted during consideration of that item or prior to consideration of the item in the case of a closed session item. Please turn in comment cards to the board secretary prior to the item you wish to speak on. Meeting was called to order at 5:14 p.m. Roll call. Mary Campos is absent. Joseph Haney is present. Raymond Jackson?
Present.
And Priscilla Trichet? All right. Priscilla, would you like to lead us in the flag salute?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Next item up is approval of the minutes of board meeting on November 28th, 2018. Do I have a motion?
I move to approve the board meeting minutes from November 28, 2018.
Do I have a second?
A second.
All those in favor say aye.
Aye.
Those opposed? This motion passes by a vote of 3-0. Meeting will now convene to close session to discuss the matters described in section 2. We are going to close session at 5:15 p.m. Okay, we return to open session at 6:52 p.m. There is nothing to report from closed session. Takes us into item 4, communications. Oral communications, non-agenda items. The public, including public attending a teleconference location, are invited to address the board regarding items not listed on the agenda. No individual presentation shall be for more than 3 minutes, and the total time for this purpose shall not exceed 15 minutes. Ordinarily, board members will not respond to presentations and no action can be taken. However, the board may give direction to staff following a presentation. Please turn your comment card into the board secretary prior to this agenda item. Do we have any?
No.
Okay. So that takes us to the director's report. Jill Marks on the OPA MOU.
Thank you. I am pleased to report that the MOU board committee met last week. We discussed items submitted to date, remaining items, and also discussed the timeline as outlined in the actual MOU agreement signed in July with Capo regarding what the steps are after submission, what the steps are regarding charter renewal, what the timeline looks like. A lot of people want to know, well, what's going to happen, and the process is outlined in the MOU, and we discussed what our actions have been to date. And there's a couple of different timelines according to when the board takes up the information and recommends that we have indeed met the or approves that we've met the MOU conditions and terms, and then we can move forward from there. So just wanted to report out that's what we discussed at our MOU committee meeting. And again, we shared progress and what the process looks like. So we have a deadline of the 18th of December to submit all items. And then we will be meeting with the fiscal team to discuss clarifications. And by we meaning our OPA team that's worked on the MOU. And this will allow us to provide any answers or clarifications that may arise from any of our responses on our last items.
Fantastic. Any comments or questions from the board? Okay. Nope, seeing none, we move on to item C. For information, financial report. The OPA financials for October 2018, presented by Brian Badillo, Exit.
Evening, everyone. One second here while do I have to share my screen or? So I did bring out printed copies. I don't think I'd started doing that. I think Larry from the last meeting started to bring printed copies. So you should have printed copies. I think for the first one, I'm going to start with a school that we do a little more explaining on because of the deficit that we have in there, and that would be the South Orange County campus. So that would be the first financials we're going over. And, you know, we're continuing with the same presentation, the dashboard that Larry had presented last time. You know, the first couple presentations I did for you, I did kind of a slide format. But this is the typical way that XED presents. So we have the dashboard that we've created, and it really gives you a good snapshot of just right in one page, the financial position of the school. And so we're going to walk box by box on this. And just wanted to start right there up in the key points. Excuse me. Typically, I'll start with any big changes that I put in the key points. One thing just to note is as of 12/12, we just had one November item outstanding, which is, in my opinion, fantastic. We should be able to close what I consider on time this month for November. And so that's excellent. We're still continuing to navigate still the transition a little bit. Payroll is still a little bit consuming. And then the one thing I did add in the key points there is down on the fourth bullet for just the general updates for SOC. I really wanted to make sure that we just reiterated the effect that depreciation is having. And so we did a little bit of a different presentation on the financials for this one so that you can actually see what effect that is having. So we're just going to start in box one. Box one is just kind of the key performance indicators, and it gives you the kind of the stoplight, red, green, orange, yellow is what it kind of goes through. And obviously, as we know, your ADA versus budget is in the red. We had a significant decrease in enrollment from budget, and that's why that radio button there is red. And in turn, it's going to turn the net income loss to red as well because of the loss of enrollment, loss of ADA, and in turn the loss of funding. Cash on hand and the year-end cash actually does stay in the green, and so those two stay there. And just going right down into box number 2 for the ADA enrollment. Initially, I had just 3 months in there, but it was worth pulling month 4 to show that. To show the additional kindergarten class that we're forecasting. So I think before that, as you can see, in the first few months, we were just right below 700 in month 1, and then kind of climbing to, I think it was about 703, 708, somewhere around there. And now, as you can see from box 2 to 3, we are actual through month 4, we have an enrollment of 735, an 88% of 96.3, which equates to an average daily attendance of 682.84. But as you can still see, versus the budget, the third column over, we're still 81.54 in the deficit for ADA. And, that's really contributing to the loss of funding. Over on 4, I wanted to make sure that, and again, I'm not 100% sure how much Larry went into the explanations of our dashboard last month, but box 4 is an LCFF supplemental and concentration grant factor. For OPA, your percentage doesn't affect you as much because it is so low. Typically, I mean, the schools that I work with are low income schools, and so their 3-year average percentage and their district UPP are high, and I'm talking in the 90s and high 80s. And so what that equates to is additional funding for supplemental and it's called the supplemental concentration. So the factors of your foster youth, your free and reduced population, things like that, you get additional funding for that. We put it here, and it's good to see, just to see where OPA kind of falls. Again, for SOC, we're at 14.2, again, relatively low. So supplement and concentration grant that you get from LCFF is going to be relatively low as well. But again, it's an important piece, especially to LCFF. So now just getting down into the numbers, box 5 down there for the income statement and net income and loss. What I'm showing right now, our forecast as of 10/31/18 in that first column, box 5, we're projecting a net income after depreciation of $291,562. So the presentation difference that I did here is if you go just one line above, I did a net income before depreciation. A lot of school districts presented in this manner because they have so much capital projects, building, and things like that, that depreciation really affects their bottom line. So they separate their audits into school financials and then what's called a government-wide financial. So what we present is, because we're not necessarily a government entity, we present you in GAAP. And so we include depreciation in there because we're full accrual. So it was just nice to see that without depreciation, your net income before that huge depreciation is $195,129, representing a surplus. You'd be in the green without the accelerated depreciation of the capital assets that you have. But as it stands, we do have to recognize it. We've already kind of begun the accelerated depreciation on the things that we bought, and we're projecting the net income to be $291,562. Going down there on cash balances, again, just having that lower enrollment, it's really affecting what the projected cash balance is ending to be versus what the budget was. But there's also some other factors in there. The original budget was about 1.8 million, and this is just in the bottom year-end cash variance, year-end cash balance variance. We're projecting it to be 889. it seems like a lot. You're almost looking at a $1 million cash variance. For some reason, when the budget happened, they projected a lot of the funding coming through, which meant not a lot of, so your property tax, all of your big ticket item fund revenue items, they said, well, you're going to get that cash by 6:30. And so that's why that budget amount was actually fairly large. We're fairly conservative on what we say the state is going to give you and what you're going to get. And so I have your ending receivable. If you go to box 7 down there, just the second line down, your accounts receivable, but about the last column, 6/30/2019, and that's FC is your forecast. I'm assuming you're going to get a receivable and even a due from others of really close to about $720,000. And so that also affects the cash balance because that's cash we say you're not going to have at 6:30. So if I said you were going to get that money, that does bring it right back up to about $1.7 million. And so I think just the way that we budget versus the people that created the budget, again, a little more conservative about what we think the cash is going to be. Historically, what we've seen, there's always, property tax is almost always accrued at the end of the year, and property tax is your biggest revenue source. And so that is that's the dashboard for SOC. I like it also because we have a cash on hand. I like seeing that because what it does is basically says, what is the school spending? You know, if the school got no funding from then on, how many days would it survive? Essentially, we've got 65 days as of last year. We expect at the end of the year, you'll have days cash on hand at about 51. It's a 13.9% reserve. Just as a comparison, district requirements are 3%. So, you know, a healthier reserve than most districts do have. So that's the dashboard for the school. The financial analysis follows on the second page. Typically what I do on here is, this is really the backup to what I speak of up in the dashboard. If there's anything different from month to month, I will highlight it to speak on it, but there were no changes. They're really the same bullet points and kind of talking points as we had last month. In addition, what happens is sometimes the numbers in there will change. Let's just say LCF revenue was, last month it was 612 or something like that. There's small changes in there. I'll make the changes so that they line up. If there is a significant change, and usually I'll use about a 10% difference, I'll highlight the change so that I can speak on the change as well. But for the sake of from last month to now, we didn't have anything that I highlighted. And then just going down has the ADA, and then following are all the supplemental items that I'd usually put in kind of the appendices of a presentation. So your check register, income statement, cash flow statements, and things like that. Any questions on the SOC October financials?
Any questions?
My only question, not for the October, but moving forward, with the new budget that came out from the governor, I mean, I know that sometimes we plan, we forecast, and then when his budget comes out, we have to go back and readjust.
Yep.
Is that reflecting here also? Because I know, for example, Capo, the funds that they receive is way lower than a lot of other districts. And is that number reflecting also here for the ADA moving forward, or no? Are we still forecasting from before then?
So the most recent governor's budget that we got and what was approved with the May revise and eventually signed in June, those are the numbers we're using. We're always up to date. So if there's anything new, we'll always update it. But I have to warn you before, because the first real budget change comes in January. And that's just the first kind of look at what they're expecting for the rest of the year. And then it goes to the May revise, and that's kind of where we start to, so kind of in the January to March, we start to get, all right, where do we expect the state to end? And what do we think we're going to see as far as what the funding is going to be like? And then at that point with the May revise, we adjust the numbers and revise. And that all happens kind of around budget time for next year. But yes, as those come out, we update our numbers. And so you're not looking at old forecasts, just like how in the original budget, they used an old number for the one-time block grant. we adjust once we knew that it was going to be less, we adjusted that down. We don't want you to think that, oh, we're going to get all of that when you're really not. So, and I mean, me personally, I'm fairly conservative. We pull from three sources. It's DOF, SSC. Oh, what is the other one? There's another one that we use, but we kind of put them into our budget and say, okay, what do we really think is going to happen? And a lot of times for me, I tend to use the most conservative approach. So conservative on the revenue, and on the flip side, expenses on the. So I like just having that cushion just in case.
Okay, that's good to know. Thank you.
Mm-hmm.
Okay.
All right.
I guess no other
SOC?
questions. Nope. All right. Thank you.
Okay. Oh, one more.
Oh, one more? Sorry.
Yep. Saddleback.
Oh, sorry.
One more school.
That's what
This
happens.
one-
It's December. All
This
right.
one, it's all right. Saddleback is again. I start with that one because of depreciation and a little more explanation. And so for Saddleback Valley, again, same dashboard. You have the same kind of key points on there. This one, as you can see, just from the key performance indicators, ADA versus budget. The only reason that's yellow is the percentage that we budgeted for is a little less. Because if you notice, our actual month through our actual enrollment in box 3 is 595. The budgeted amount was 589. Sorry, people at home. Thank you. Okay, so just right there in table 3. The only reason that 88 versus budget is yellow there is that our actual through month 4 in box 3, column 1, 2 versus the budget is just coming in a little lower, and I'm talking 4.47 lower, and so it triggers it. It's not green anymore; it becomes yellow. Nothing too much to worry about on this end. Net income is still in the green. Cash on hand and year-end cash are still in the green. And as you can see in table 2 on the enrollment, we're above what our budgeted ADA is in enrollment, and actual ADA is just below that budgeted amount. And so we're really on track with Saddleback as far as enrollment goes. Again, you have table 4 with your LCFF supplemental. Again, extremely low at 14.2. Your district cap is 31.3, and you're not even at your district cap. On the financial side, we are forecasting at 10/31/18, excuse me, 272,564 net income. Going down to the cash balance, which I will speak of a little bit, we are projecting to an ending balance of 1.6 million versus the budget amount of 1.95, about a $310,000 variance. A piece of that is still just what we expect you guys to receive and what was originally budgeted. But I did want to talk about, and I think I've talked about this graph a couple meetings ago. If you notice that it does a really big dip down there in the cash balance. So what was happening was right around, I can't remember Oswaldo, maybe August into September, I noticed that we weren't getting our property tax payments. So I said, what's going on? Can we kind of figure out why aren't we receiving this? And Amy, thank you, sent an email over to Saddleback and said, where's our payments? And they gave us a, sorry, I'll let you.
We sent an email over last weekend asking them why we had not received our payments. They responded back to us quickly stating that they would, I guess it was an oversight, and that they are going to get them back before our break. And then I believe there was some additional information.
When I read the email that you forwarded to me, and thank you so much for the initial contact, it said that they hope to resolve it before winter break, but there was not a clear statement that they would.
Mm-hmm.
And my assumption is they're working on it. However, we did contact the OCDE, and they understand the urgency. and have already or will contact Saddleback Valley Unified shortly to help ensure that we receive what's outstanding within a short period of time, which is before winter break, I'm hoping.
So what do we estimate the amount to be? Just in round numbers. 10,000, 50,000, 100,000, 200,000.
Probably about 800, actually about $900,000.
So 900,000. And we found out about this a few weeks ago,
No,
days ago.
right in August, I noticed they weren't being paid. So there are some districts that lag on the payment more than others. In fact, I have a district that doesn't pay it until the end of the year. And so I just wasn't sure what the normal standard was. And so that's the reason that I asked. I said, do you typically get them, because Ed Code is the district receives it, they have to pay it to you within the month. So like clockwork for SOC that comes from Capistrano, right? Yes.
Yeah, ours comes on a monthly basis.
Yeah, we get a check like clockwork between the 10th and 15th. And so again, just, hey, that's different. It's not normal, but it's not out of the ordinary, because I do have a district, like I said, that very much lags on the payments. And so I raised the question.
In August.
Yeah, August, maybe September, when I noticed that, because that's when I expect the first payment to come.
Sure.
And I wasn't sure. And so I kind of exhausted my resources, just one, going on the CDE, because a lot of times I can find, okay, well, what district is responsible for doing this? And so it continued to go on and really didn't have an answer. And so then my next step was at some point, again, in the middle of November, and we haven't received anything. Okay, this is very odd. So I just wanted to make sure I was looking at what Ed Code says and who is responsible for your payment. And at the moment that I found out, it's whichever district, because that school is authorized by OCDE, and whatever district rejected the original petition is the one that's responsible for your property tax. I then sent an email out to everyone, and I said, okay, this is where it is. Can we please find out what is...
This is in August?
No. This was just last week that I said, okay, it's...
Got it.
Yeah, I really need
Well, we know where they live, so they're good for it.
Yeah,
I'm sure.
At that point, I just said, we really need to know if it is the case that they just give you payments once every 2 years or at the end of the year, which again, not Ed Code, but it does happen. I just wanted to know so that I can properly forecast if we're going to have a cash flow issue for the rest of the year.
Got it. And so when we first met Osvaldo, one of the things that I was really excited about is, if you remember, Osvaldo was talking about that there's grants and there's money out there that we're qualified for, that we could apply for, that we're just not getting. And I was very excited about that. And I've been looking to see those show up somewhere now, right? It's been a little while. And part of that is, I feel like that we should probably establish some budgetary numbers. When I say budget, I mean that we would identify a variance, right? Something that's unusual. And so if we're saying, hey, we're 800K light, that's a number that should stand out.
Yep.
And so, and it shouldn't stand out in December or November, or frankly, even August. And so I feel like OCDE and Capo, they're right. This is just a conversation. We say, hey, we noticed this. They say, oh my goodness, sorry. We get it squared away. But if we wait, if we don't notice, then it goes a long way. And so it would be great for us to get to the point where we can know kind of quickly, maybe on a quarterly basis at the outside, hey, something's missing, something that we should be expecting. Now, we're totally new to you, so you don't know. And Lord knows the people that handed it over to you didn't know probably either about what, the norms should be. But let's establish those norms. Let's, pay attention to that. And when I say let's pay attention to that, as you've heard me talk about this before, the topic of late fees. And so when I look through the check register, and I know when you printed it out, you said, oh man, his eyes are going to stick right to that thing, right? Because we're just giving it away at that point. And so I would so much rather to have new, I think they call them backpack seat backpacks or whatever they are, just all the things that a classroom can need. And if I see hundreds of dollars a month that are going to late fees because of what? Is it because and I'm talking specifically about Southern California Edison. Is it because we're disputing our electric bill? Is it because we're saying we want to negotiate? I mean, I'm being flippant, obviously, but that seems like, let's just get it together. Let's get especially for things that are expected and customary, the water bill, I'm guessing. And, unless the electric bill is something wild, and then they're really good if we reach out to them and say, hey, we think there's a problem. They'll come and do an audit and look around and give us feedback. Anyway, I'm going on and on about it. I don't want to do that, but late fees again. I'm seeing late fees again.
Yep. So
I'm going to keep the late fee light on and say we probably have made some improvements. I am noticing that, and I want to recognize that I'm not seeing as many late fees as I've seen in the past, but I'm still seeing them. So I don't want to give up on hunting them down. And if you could please just talk briefly about that sometime during. I don't want to derail what you have going on here, but
nope, I was actually just right at the end. And yeah, and I was, and I just wanted to adjust also with the property tax. August would have been the first payment, and so right when we didn't get it, it was a question: why didn't we get it? We have the checks for the other schools. Why don't we have the ones for the other? And so that would be the first time we recognized it, and I made sure to call it to the attention right away. On the late fees, I did check back at some of them and realized that it's a little misleading because we put, let's just say it is credit card and late fee, and then we'll put a number there. Let's just say it's $800. There's only a portion of that it's actually the late fee, and it's not in its totality. So what I think I'm going to do is when we start to name our naming convention, I've asked the staff to just say, if there's a late fee in there, let's kind of put it in parentheses so we see, so that the board doesn't think that this is all a late fee. So like a SoCal Edison that looks like it's a $2,000 late fee or something like that. We just want to make sure that you're getting the full story, that a good portion of that is actually the payment, and there's a piece of that's the late fee. In addition,
yeah, because that's a $10,000 line item. So I want to, just to be clear, right. I didn't assume that's a whole line item. I mean,
just to make sure.
Late fee.
Just to make sure.
Yeah,
it's a little.
I will
more
come out of my
that
chair
well.
for a $10,000 late fee.
Yeah, but and also to address it. I mean, I don't know if you wanted to speak to what we talked about.
So also to sort of address the grants and other areas of income, Brian and I were talking over this weekend. And one of the things that I had noticed is that we don't apply for federal title money. It's a pretty simple, easy process. We won't get a lot of money because we have such a small unduplicated percentage that Brian was talking about a minute ago. But it is free money, and we will get probably over $100,000. So, an extra $100,000 is great for just a quick application. So that's something that we are also going to be doing in the future, is applying for things like our federal title money and any of those other grants that are out there. That money would pay for our professional development as well as some of our curriculum costs. It's restricted, but there are a lot of uses that we can use it for. So, so it's something that, all or most school districts apply for, and that will give us some extra
fun things to spend that money on.
Yeah, and
it's never mind.
It also,
we're out of luck, Priscilla. Sorry about that.
And other local districts just shy away from it because there's a lot of restrictions involved with it. And so my first question when we were talking about it was, how well versed are you in federal? And she said, I've done ConApps, I've done this. And I just said, thank goodness. And let's do this, because as a former auditor, I've audited federal amounts. I know exactly what we need to do. It is just hard to get the schools to be on board and understand what is required of federal money. And we have that. And so, yes.
It was before you met Amy, Dr. Amy.
Yes. There are very few that I'm comfortable with saying.
Well, I think it's also because the charter school world is fairly new, and
right.
there were a lot of restrictions for charter schools, but I think now a lot of these restrictions are being lifted.
Yes.
So there are ways for charter schools to apply for these grants, whereas before we were not authorized to do so.
Exactly. And they just didn't have the manpower to run a categorical program at a small charter school.
Yeah.
So as long as you've got the know-how.
The application, we've already got it's already set up.
Yep.
We set it up over the weekend, so we're already ready, good to go to apply
for next year.
Good.
And I was just right at the end. And so I was just talking about the cash balance. And so that property tax, that's kind of why you see that dip down there. And initially it was really that lag in funding. But as you can see, it affected us all the way down through November. And as soon as I get that, this will actually change in the following month, because if we are to receive this by December, you'll see that line jump right back up, and it'll then normalize to what we should see as budgeted. So that's kind of why that looks like that. Everything else, like I said, looks fantastic. Days on hand, just down there at the bottom right corner, we're projecting to end at a 31.7% reserve with 116 days of cash on hand. So that's excellent. And down into the financial analysis, same as last month. Nothing highlighted there to speak of, but I'll definitely answer on any questions if there's anything that you have on those. But they are fairly close to what they were last month. And check register with some late fees in there.
And one of the other things that we talked about was kind of looking at anomalies, right?
Mm-hmm.
So if we're expecting the gardener to be 2,000 and 2,000, and I'm making a number up. I don't know what the number is, 2,000, 2,000, and all of a sudden it's 4,000 that we say, whoa,
yep,
interesting. And so like I'm thinking specifically of our IT vendor, right? So it's 12,000. So I'm thinking that number is going to be 12,000. But when I look in here, I see charges of additional things, like additional 7,500 in here. And to me, that's a significant enough. And we're just, right, we're learning what I'm looking for, right? So I'm just trying to share with you that it would be nice to know that. It'd say, hey, on our vendors, that we've got the same vendors that we're, same 10, 12 people that we're paying every month. And if we see some percentage variance, and I don't want to create a big burden, but if we see that, you know, like there is right now, there's additional $7,500, including some camera repairs for SV, and SV doesn't have cameras. And so, you know, I got questions about that. So that trigger that says, hey, just so you know, we've got a vendor, you know, that's, I don't know what you call that, over budget or just a difference. And I'm not saying that they're not legitimate charges. I don't know about that. You know, that's the inquiry that happens after this, but.
So I actually remember you asking that from one of the first board meetings I attended. And so right now we're still, you know, we're only in through November. And so the baseline, I'm really setting a baseline right now. And it's hard for me to say that the $7,000 swings in a month aren't normal just yet, because I don't have that data to go back on and reflect on. So right now I'm still creating the baseline. Typically what I'll do is, and it's not an extra burden. I can pull by vendor what the monthlies look like. And I often look at that, especially when we're going over in a section. Let's just say in your student materials, we're over by 30,000. I'm going to really want to know why you're over by 30,000.
Yeah.
And so I will pull the detail and say, and typically and we did this already in our wire. One of them was just curriculum. You know, the original budget had about 100,000 maybe in there, and we were projecting to spend about 150. And I said, why? And I found out that there was a curriculum adoption at one of the schools that was not budgeted for. And so we immediately put it in, readjusted the forecast, and went from there. So it's those type of things. Again, we're kind of creating a baseline right now, but I will be able to say, no, this is a little bit over, this is a little bit off for the month, and then they'll eventually make it into their analysis.
Well, if it pleases the chair and my board mates, I would happily volunteer to work that list, just to say, if you say, you know what, here's over the last 7 months, here's the vendors that show up. And maybe I'll just take a pass at saying, hey, let's give this a plus or minus 1,000, you know, as an alert kind of thing.
Yeah, sounds good.
We've been also, Brian and I have been setting up meetings, and we're planning on meeting frequently in the future just to go through some of those same things. Because a lot of times just a second set of eyes, me looking through, I can catch some things, and Brian looking through, he can catch some things. So having us working together, looking at it, making sure that those anomalies don't happen and that we can catch them very quickly, even, you know, and then send out emails or try to figure out exactly what happened. So I know we're meeting again next week to just kind of, like, you know, at least twice a month meeting and making sure that everything is looking the way it should be.
At least once a week we've been touching base.
Yeah, well, lately, yeah. I'm hoping to move it like every 2 weeks.
This feels awkward when I haven't checked it. So.
My suggestion would be to loop in accounts payables too, because the idea is for us to review charges before we pay them.
Yeah.
And again, to be understanding what we projected expenses for, and before we order and pay for something, and sometimes it's communications between the site and the administrative office to make sure that these whatever's being ordered is in line with what we've budgeted for, the curriculum we're going to be used. So we're not looking at sort of a forensic, like, why did we do this? But again, with payables on board and working with those who are doing the ordering, we can avoid having to go back and have surprises.
Right.
And also with our spend bridge system now, where it's easily the office managers are entering things into the spend bridge system, and everyone who needs to has access to be able to view that system and be able to see what we're spending money on. If there's any orders that look out of the ordinary before they actually get processed, so that we can catch anything that doesn't look right. Having that system and having things be more automated and more easily shareable between around the organization should also help with those issues of communication and just making sure that everything that's being purchased is supposed to be being paid for, or being paid for is supposed to be being paid for.
That's awesome. I mean, and I'm a big fan, and I love the idea that, originally we can come up with some numbers right now, but we're going to develop, almost an algorithm that's going to look and even to look back.
Mm-hmm.
So I'm just as excited to look back over the last year and you say, this seems really unusual. Back in March, we had this, and let us go back and dig into that to say, that was anomalous. So right now is good, ahead of time is best, but to look back as well, to be able to go and revisit something if necessary. So I stepped on Larry's toes pretty good last month. And so so I'm very excited. So this is exactly where we need to be. I love that, we're on track and we're going to stay plugged in. And this is exactly the kind of information that we love to see. It's nice and fresh and relevant and actionable. And this is great. So I appreciate that. I mean, he'll probably never come here again while I'm here, but I just want to recognize that I really like what we're seeing here today.
And just really quick, I know we're almost over time on this, but I also just wanted to say that, and I probably should have mentioned this a long time ago, was we call this October financials. In reality, I have through November in there. It just, we haven't officially closed, and so we don't call it November financials, but my forecast includes what you spent through November, and I've taken that into consideration in what I'm forecasting for the rest of the month. So you are seeing really 13 days out of what OPA has spent and what I expect to spend for the rest of the year. So we are caught up, and we're there.
Up to date and actually adjusted it just as of Monday.
Yeah.
Changing around what these numbers said to make it as accurate and as up to date as possible. So, so just making sure that you guys have the most current, the most correct data at the board meeting, updating it that same week. So you guys will have that.
Awesome.
Oh, one more question. Sorry. Brian, I'm sorry. I know last time you were not here, but I think, I don't recall, I think it was Mr. Jackson who asked for us to get a report, like maybe on a quarterly or monthly, like if there are things that snaps out of your eye,
right.
So that way we are aware of it and not waiting until the last time. I don't know if he shared that with you. I think it's very important for us to see that. And it's probably something new that we're not accustomed to at OPA because it wasn't done before.
Sure.
So, and I think, like Amy was saying, if we train also the managers and those people putting those orders in place, it would be good for them to get into the habit of seeing, like, let's say, for example, if Amy said, I giving you a budget of $300 for this particular item. So they need to learn to stay within budget and not go back and say, well, we did say that, but it costs less or more. So I think that was the reason why Mr. Jackson had asked for that. So.
Yeah, and we'll try to identify as much of those variances as we can in the analysis that follows that first page, so that the narrative that we write there, that's going to address the variances that we see. Again, it's off because it's comparative to a budget that it wasn't as involved in as don't have the complete understanding of. I think if we do a revised budget eventually is what we're aiming towards. then we're going to have something there that I can really have a comparison to. But yes, absolutely, we could bring those to the table, and they will be listed in there as much as we see them. And like I said, on as we meet, we identify those in those categories as much as we can. And we sat and walked through the thing and said, it looks like we're spending a little high here. What are we thinking? And should we increase the budget a little bit? Should we lower the forecast? Or we're not spending as much? Should we reallocate it and move? And so we're doing this on, like I said, at least right now, a weekly basis.
And going back to what you were saying about really looking back at what we have spent in the past, looking at what our historical data is, and using that to help also project what the budget is that we should be spending on various things. So again, looking at what we are spending, what we have spent historically, and what we think that is going to change in the future. And we'll put it in there to make sure it's all in that report each month.
Yay. Good job. Thank you.
Thank you, Brian.
Dramatic. All right, that takes us to item 5, consent agenda items. First up is approval of purchase orders and warrants. Item A1, contractor agreement with Western Youth Services to provide a non-bilingual licensed marriage and family therapist or licensed clinical social worker 20 hours per week at a rate not to exceed $93,240 for the remainder of the 2018-2019 school year. And A2, Wells Fargo Vendor Financial Services invoice number 68992615 for $19,453.84 for copier and printer services for November 2018. Also on the consent is B, classified personnel action report. Resignation of employee number 521 as of December 3rd, 2018.
So since this is a consent calendar, all this stuff has to be approved at the same time.
We can pull an item if you'd like.
Can we pull it and talk about it separately?
We absolutely may.
So I would like to make a motion to pull the independent contractor agreement, just because I'd like to talk about that a little more, if that's okay.
Sure.
Can we do that? Pretty please.
Do I have a motion then to approve the consent calendar subject to the removal of a contractor agreement with Western Youth Services?
Well, then I'll make a motion to pull this Wells Fargo print release payment invoice, just because I would just have some questions about that too. Sorry.
Okay. So do I have a motion to approve the classified personnel action report?
There you go. I'll make that motion.
Do I have a second?
I second.
All those in favor say aye.
Aye.
All those opposed? This motion passes unanimously. Next up on the agenda is the contractor agreement with Western Youth Services to provide a non-bilingual licensed marriage and family therapist or licensed clinical social worker 20 hours per week at a rate not to exceed $93,240 for the remainder of the 2018-19 school year. Did anybody want to present on that? And maybe that'll answer some of the questions, and then we can put it to a vote and then have discussion.
I can provide an explanation, and then Dr. Kernan can add additional details. OPA applied for Tier 2 funding, special ed funds for additional mental health services. So this is where the funding for this position comes from. The 20 hours per week, not to exceed $93,240. My understanding is that is the amount of the contract, not the amount that would be spent for this position, but that's the amount, for the additional funding that we received for these services.
So we receive additional funding. We currently contract out for counseling services through Western Youth Services for several of our Scholar Academy students who require it for their IEP. So I believe we have 14 service agreements for different students for counseling services. So we then receive money back from the state through Tier 2 ERMS funding for each one of those students who receive those counseling services. So we were planning on using that money that we receive back for those services to, instead of just having a counselor that sees those individual students, have an in-house counselor that we'll be able to have and utilize for other students as well as those Tier 2 ERMS students. And so we'll get more counseling services out of that person. They can do groups with non-special ed students as well as special education students. They can meet with students who are having social emotional issues. They can also go into classrooms to provide social emotional support. And so using that kind of creatively, using that funding to then pay for that person to cover those students who require it, but also be able to use that person for additional counseling services on campus.
And so currently we spend how much
Currently,
between those 14 contracts?
We get back, we use the ERMS funding for a few different salaries right now because we're not paying for a counselor. So
not to cut you off, I'm trying to get a sense for the total financial.
I would have to look that up. Our net impact last year, I believe, was about, well, we received back about $96,000 in ERMS funding.
And we could conceivably get very similar amount.
Same amount back.
So then this might be a net zero.
Net zero.
Okay. Super. Did we, as a part of our commitment to sort of being vendor agnostic, did we look at are there other organizations that provide similar services? And did we look at those?
There are some other organizations that provide similar services. We were actually looking at another one of those providers for deaf and hard of hearing services that we were looking for as well. Those other providers, one of the things that we would have to do, they all had similar, the contracts would all be a similar amount from what they gave me back. One of the differences would be that then we would have to transfer all of those services that those students were already receiving on their IEP to that new to be a new service agreement with a different company. So part of it, a little bit, was kind of the convenience and the fact that those students were already working off of a master agreement with Western Youth Services.
Got it. And because I know sign.
Government Code 1090 prohibits us from entering into a contract with you to provide these services.
There you go. Enough said about that. So I just want to make sure, and as we review these kinds of agreements, I just want to be sure and put that kind of out to the world that we asking about, hey, who else does this? Did we look at that? Is that right? Do we have any relationship with them? Sounds like we've got some experience with them, obviously, but okay. Thank you very much. I feel so much better about this, having heard her say that, than if this were part of the consent calendar. Thank you for that.
Any additional information or questions from the board? Do I have a motion to approve the contract with Western Youth Services?
I'll make that motion.
Do I have a second?
I second.
All those in favor say aye.
Aye.
Those opposed, this motion passes unanimously. Takes us to the second item now, is the Wells Fargo Vendor Financial Services invoice number 68992615 for $19,453.84 for copier and printer services for November 2018.
Do I need to make a motion to approve, and then we go through that before I can ask questions?
Marks, if you wanted to speak about it briefly, and then set the table, and then we can make the motion, have our debate.
This item reflects the current contract we have with Kyocera, and Wells Fargo, that is underwriting the expense for those rentals and those services of our copiers, printers. It is very high. We have engaged in conversation with Kyocera. We will need to discuss our next steps with the board, but for now, this reflects again the monthly agreement to lease the copier and printer services, and the amount is significant.
Okay. Do I have a motion?
So I make a motion to approve, and then somebody else makes some seconds, and then we can talk about it.
Absolutely.
All right, I'll make a motion.
Do I have a second?
A second.
All right, Mr. Jackson, you have some things you'd like to share.
I do. So once again, in the spirit of talking about late charges, I see 2 late charges here, both of them for $826 for a total of $1,600 that's on here. And so, so if we have an ongoing relationship with them, and if we have a contracted amount with them, why are these not getting paid? Because now it says, I'm looking at the current items due is 19,000, total amount due 37.2. It's 37,002 and some change. And so, is there a way for us to set up kind of a level pay plan so that we don't have $1,600 worth of, because that's like 5%, right? It's like that's like a 5% fee. 5% of the value of the total amount due is in late fees right now. And so that's the part on behalf of the checking account, I'm reacting to that. So how do we help this not happen again? Pretty please.
We can set it up for automatic payment.
And that, can we set it up for automatic payment, like a particular amount? Because what scares me about automatic payments is like, I don't want to give somebody the key to the checking account that says, hey, whatever you want, go ahead and take it out. But I would love to know that if our amount due is $12,500 a month, let's just set it up for $12,500 a month, get it paid at $12,500 a month, and not have these 5%, punishments every so often, right? I want to recognize, however, that we've got this MOU is a magnificent project and is consuming an inordinate amount of administrative bandwidth, and I want to recognize that. So I don't in any way, by talking about this, want to make it appear in any way that somebody's underperforming, it's easy for me to sit here and scan through this book and pick out late fees. It's very easy for me to do that. In part because the information is presented so clearly. Thanks for doing that. But at the same time, I want to be able to ask the question and say, hey, everybody, all these smart people here, let's get our heads together and say, what do we do? And maybe Brian's got an idea about something we can do to help. If we've got a committed amount and we know what that amount is, I'm assuming there might be some slight variance for click charges or right number of copies or something. But beyond that, the amount is largely fixed. Let's just commit to it, pay it. And in exchange for doing that, turn around and say to them, hey, Wells Fargo, we're going to get better about making sure we do that. And in exchange, we'd love for you to, waive these for us. And then won't happen again. Would that be, Brian, is that a conversation? Who even has that conversation here? Is that a Osvaldo conversation? Or who's got the bandwidth to even have this phone call?
We can set up something where if items are relatively the same every month, essentially we just have the school sign and say, this is what we pay. And the check just goes out based on what the invoice is, and it's automatic.
Yeah, well, I think we have a contract with this group. I mean, yeah. So I feel like that amount has been established. We approved this amount some time ago.
Yep, that's definitely something we can do.
Got it. So.
Absolutely.
Got it. So that's Mr. Barley saying that he's going to talk to them about the late fees in exchange for us getting really good about the future payments. Because I'm sure there's no fun for them too, right?
And I would also, in in this QC process look, because I believe that the dollar amount that charge is lower than what's depicted here. I think this is the old amount, and then there was a lower amount for May of this year.
Ooh, it's
So we should just
12,000 or
double
something.
check it before we put in it.
I feel like that was back in May, in the May-June timeframe.
Yep.
Just to sort of narrow you in a little bit there, David. I don't want this to turn into a gigantic magnum opus for you, but okay.
All right. Any additional questions or comments? All right, so the motion before the board is to approve the Wells Fargo vendor financial services invoice number 68992615. All those in favor say aye.
Hi.
Aye. Those opposed? This motion passes unanimously. Takes us to item 6, items scheduled for board action. First up is to approve the 2018-19 Governance Team Handbook, OPA. It is recommended that the board approve agenda item IA. Should have had that coffee. Okay. Ms. Marks.
Yes.
Thank you.
The 1819 Governance Team Handbook was developed by our legal counsel. Legal counsel saw previous versions of governance, past versions of Governance Team Handbook, created the handbook that's in front of you based on what is needed per the Brown Act, what we need in terms of regulations. Also, it's based on best practices and best practices that would also support this governing board. The Governance Team Handbook also is, having it updated and approved by the board, is an MOU item. But again, just because it's an MOU item, we don't develop this because of that. But it's indeed something that will guide and support the work of the board on behalf of the organization for time to come. The handbook would be and should be revised on an annual basis. There are other pieces that can also be added to or support or provide support for board governance, such as board norms and additional things that are very, very board specific or specific to this board.
Do I have a motion at this time?
I'll make a motion.
Do I have a second?
I second.
All right. Do we have any questions or comments from the board?
I have a question about the shall. I'm on page 11, and it says board election nomination. The board shall consist of no less than 3 and no more than 7. And I'm interested to understand how do you know if you go to 5 or to 7? Is it just based on the size of the school or what's that? The workload of the board? Because if that's the case, we should have 16 board members or 17 board members.
It's by your bylaws.
Well, it says you can have no less than 3, no more than 7.
That's what the bylaws said too.
Got it. But how do I, like right now, how do we know, do we stop at 5 or do we get 7?
Well, it's a prerogative of the board.
Yeah.
Okay.
So if we were,
It is.
for example, we would like to be 5 right
Mhm.
now.
Right.
So we have an odd number.
Got it.
But if we, let's say we had an abundant pool of really great candidates and we thought, you know what, we don't want to just go to 5 because there's 2 other people that would be really awesome candidates that would really strengthen the board with their backgrounds or their experiences, we could choose to go to 7.
Nice. Okay.
We're just not compelled to.
Super.
Yep.
Other than that, I have to say, this is a really awesome document. And so I would like to recognize Priscilla's contribution to this because I know she worked hard on it too. Thank you very much. Looks fantastic.
All right. Any other comments from the board? All right, seeing none, we have a motion and it has been seconded to approve the governance handbook. All those in favor say aye.
Aye.
Those opposed? This motion passes unanimously. We've now agreed to be governed. All right, we move on to item B, approve the 2017-18 OPA Independent Auditors Report and financial statements for the year ended June 30th, 2018. It is recommended that the board approve agenda item B.
What you have in front of you is the audited financials for fiscal year 17-18. And what I'm going to do is just provide you with a brief overview of each of the items, and we can actually, I'll walk you through the different pages that are important. So if you go to page number 2, on the top portion, that's actually the very first paragraph where the auditors provide their opinion, and what they do is after the different audit items that they have, they provide an opinion if the financial statements actually represent fairly the financial situation of the organization. Based on the opinion of the auditors, they do represent the financial situation of the organization based on generally accepted accounting principles. If we move on to page number 4, this is the statement of activities of Oxford Preparatory Academy, includes on a consolidated basis both revenue and expenses. And I would like you to look at the change in net assets in total amount, which is negative $2,071,134. I want to point out that this actually includes OPA Chino, not only OPA SOC and OPA SB. And this loss for Chino is $2,661,437. Of that, that is actually mitigated with the net assets at the beginning of the year from Chino, which amounted to $2,740,133. And we'll talk a little bit more about this, but I just wanted you to look at this and know that this is on a consolidated basis and includes OPA Chino. So if we now can go to page number 21, and I would definitely love to actually go through each of the different statements, but it would probably take us 2 or 3 hours. I'm just looking at the highlights right now. So if you go to page 21, that's actually where you can see both SOC, Saddleback, and under the column of other operations, that is the one for OPA Chino, which shows the $2,661,000. Now, as far as what expenditures are included in this $2,661,000, $1,058,602 relates to a loss of asset disposals. So basically what we are required under GAAP is that since there was a closure of the school and we had both the leasehold improvements, the property that we had, and also all of the furniture and fixtures that we had on Chino, and we closed the school, we actually had to do an accelerated depreciation, and that amounts to that $1,058,000. And the additional expenses that were included was also bringing back to the original condition the premises that Chino had with Chino Valley, OPA Chino had with Chino Valley Unified School District. As part of our lease agreement, we were required, when we returned the property, to actually bring it back to the original condition. And that's additional expenses that were incurred by Chino, not by the other schools, but with the resources that we have. So if you look at that very first column on page 21, you'll see that the net assets ending for other operations is $78,696. And as of November, we had cash in hand, roughly an amount equivalent to that as of the end of November. On the other 2 columns, where we have South Orange County and Saddleback Valley, we, if you look once again at change in net assets, which is at the almost at the end, at the bottom, We have 126,923 positive. That means that we actually receive more revenue and apportionments than the expenses that we spend. And also, for Saddleback Valley, we have 464,380. Now, in the case of South Orange County, I also want to point out that this amount, the 126,923, also includes the accelerated depreciation that we had to do based on generally accepted accounting principles. So, and of course, this 126,923 and the 463,380, both of SOC and Saddleback, are in alignment with what the board reviewed and approved for the unaudited actuals. This is a report that was provided to the board some months back for your approval. The audited financials did not have any variances from that report. Sometimes there's timing differences that are provided, but in this particular case, what was presented to the board back then aligns with the audited financials. Moving on to page number, just a moment. Oh, here it is. Page number 19. We're going back a couple of pages, sorry. That one, I would like just to note, of course, what you're looking at is the notes to the financial statements, but in particular, I would like you to also look at note number 12, which is subsequent events. And this one mentions both the MOU item that we currently have with Capistrano Unified School District and of course, the agreement that we have with them. So what we're disclosing in our financials is that in addition to relevant information, financial information, there's also this MOU item that we have with Capistrano Unified. That is important to the reader of the financial information. So moving on to page 32. That is the summary of auditors' results for the year ended June 30, 2018. What you will see there is what the audit actually brought back as far as internal control weaknesses or other items. As you can see, there were no identified internal control over material weaknesses in the report. And also there were no non-compliance material financial statements or material weaknesses. There was a deficiencies that were identified, not considered to be material, that we are going to talk in just a moment. But yes, those were identified by the auditor. So Ms. Marks is going to talk about the specific deficiencies that were identified by the auditor.
So you get to talk about all the good stuff, and then as soon as you get to that, you're like, hey, so Jill's going to step in and talk about this.
That's our deal.
All right, Jill, you're on.
Okay.
Yeah.
The deficiency that's been referenced starts on page. The information is finding 218-001, unduplicated local control funding formula pupil count. The information begins on page 34. It is the same finding that was part of the audit report from the previous year. Although there was a corrective action, the actions weren't implemented or fully implemented, but they weren't as comprehensive. And as a result, similar findings occurred. And you can take a look. Page 35 at the top. We're not in compliance with state requirements. Finding was a total of 14 students at South Orange County and 13 students at Saddleback Valley were estimated to be improperly designated. The cause that's noted. Students who were classified from English learners and redesignated as English proficient were not timely updated in the ARIES student information system to ensure accurate CalPADS reporting, which is state reporting. Additionally, OPA contracted with a separate provider for income verification of free and reduced lunch program students. Documentation was not either retained for the current school year, or student status was not updated from the prior years. The question cost is below. On page 36 is the auditor's recommendation. What's below that on page 36 is our corrective action plan. We have since corrected and taken corrective action on this finding even before it came out. The process that we have put in place to ensure students are not, who have been redesignated, are that is shown on CalPADS. Also, we're doing the verifications at the school site. It's not occurring at a centralized office location. So we have our registrars on site doing the checking and making sure that information in CalPADS is correct. Reduced price meal. Those corrections are noted in the last paragraph.
Just to be clear about that, this was classified as a not material.
That is correct.
Got it. Okay, great.
What it means is not that it's not important, but
Understood.
the financial impact is not material to the financial statements.
Right. Okay, great.
So bottom line is, yes, it was a finding that was carried over from the year previously, but we have taken corrective action even before this report was published.
And just to clarify, there's a difference between finding and deficiency. This is considered a deficiency, not necessarily a finding. But that's more accounting speak.
Even though that's the auditor used that as well, but you're right. So,
okay, great. So I'll make a motion to approve the audit.
Can I point something out?
Yeah,
I'm not
please.
sure it's material or not. On the page where it lists the Board of Trustees and Administration as of June 30th, I believe Dr. Hall was officially an interim managing director, and I'm not sure that's material to note in the.
I believe we actually included that in document.
Page 23.
Sorry, and can you repeat that, Mr. Haney?
On page 23,
Yes.
Ms. Doherty is identified as the interim executive director, which is correct, but I believe Dr. Hall was also the interim managing director at the time.
We can, if there's no other changes, we can request the auditor to make this change and have it board approved with that change.
So I'm going to recall my previous motion and make a new motion to approve the Oxford Preparatory Academy audit report by Christie White and Associates with the previously defined revision.
All right. Do I have a second?
I second.
Okay. All those in favor say aye.
Aye.
All right.
Those opposed, this motion passes by a vote of 5 to 4 to 0. Next item on our agenda, looking back. C, approve the 2018-19 OPA first interim report. Charter schools are required by Education Code Section 47604.33, Assembly Bill 1137, Chapter 892, Statutes of 2003, to submit budgets and interim reports to their chartering agency for review. It is recommended that the board approve item C. Present on the interim reports.
Brian is going to present on them. I would like to point out that it should be plural. It should be reports. So we will be looking at the report for each of our schools separately. And we should do approval separately for each report.
Okay. Brian, the floor is yours.
Right, so the interim reports, relatively easy to explain. I won't take up too much time. You should have copies in the packets that I provided there. They are in black and white, and so I'll just start with the first one that I have up on my screen. It's the Oxford SOC, and essentially they're going to have the same method behind them. Saddlebags is a little different because the form is a little more intense, but just starting with the easier one for Oxford SOC, essentially the first two columns there, actually the first three columns are going to be projected budget as approved in June. And really all the first interim is, it's your first quarter or first 4 months into October 31st, 2018. And so again, for that first one, what we're doing is just taking what we have in the budget and the actuals to date as of 10/31. And really the purpose behind this is just to make sure that the school is able to meet its financial obligations. That was really the nature of the report for both schools and for charter schools. Just making sure, again, you can meet the financial obligations. For SOC, the amounts that I presented in the October financials are exactly the numbers that you are going to see that are transferred into the first interim for SOC. So no differences there. They're as of October. And really it's a fairly straightforward report. Any questions for the SOC?
Any questions?
No Could questions. You explain the purpose of first and second interim reports?
Yeah, and really they follow kind of the same idea, right? The first interim report, I guess in some ways has less stress on it because it's just the first quarter. Second interim, it gives you a better idea of how you're progressing in the year versus what you budgeted, where a lot of districts will do their own calculation on where they think you'll end and see if that kind of is in line with what you're forecasting as a school. And again, it really is, like I said, and the wording is right there on the CD is your school going to be able to meet its financial obligations? And for bigger districts, it really is a district report. We were talking about this earlier when there was a financial downturn and these districts were doing short-term borrowing. This is really when they came into play. And so the purpose of the first and second interim, again, is just really how are you guys doing for the year? Are we seeing any significant changes? Is there anything that your authorizer should be looking at and saying, this doesn't look right? You're overspending in several categories, and what are we going to do about this? And so for SOC, again, we use for Capistrano, I use the same form that for all the schools that we work with under Capistrano, and it's the form that you have in front of you. For Saddleback, who's authorized by I don't know, I can't pull up my form on my computer, who's authorized by OCDE, they kind of follow a very, I don't want to say strict, but it's a very thorough first interim report. So it's included in your packet there. I think we only included just the alternative form, which includes just the numbers. But that whole packet that we turn into the OCDE, it includes a cash flow. It includes all the assumptions that we make for your LCFF. It asks us to break out certain sections that are normally lumped in together, like your 5800s, which is all of your consultants and things like that. In addition, it asks, they ask for a GL, and they ask whenever they put in your cash flow, if there's any big variances, what are the reasons for the variances in there? And so, again, they do a very thorough interim report, first and second interim. And so we've answered all the questions that are required of that report as well. And typically what'll happen is we'll submit that over to Layla at OCDE. She'll review it, and then she'll come back with questions. And then we'll, in turn, it's just a back and forth. And we say, okay, here's where the variances are. We've worked through them, and we provide responses.
We've got both of these. Any questions on the Saddleback Valley? Okay. We have to approve these each individually, so we'll require a separate motion on each of them. We have a motion on the SOC first interim budget.
So made.
Do I have a second?
I second.
All those in favor of approving the first interim budget for the SOC campus, say aye.
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 Those opposed, this motion passes unanimously. Next up for approval would be requiring a motion to approve the first interim report for the SV campus. Do I have a motion?
I'll make that motion.
Do I have a second? All those in favor say aye.
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 Those opposed, this motion passes unanimously. Thank you, Brian. Next up is D, approve authorization for operations consultant David Barley and OPA executive administrative assistant Lee McFadden to have access to online read-only OPA account activity and credit card transactions at Farmers and Merchants Bank. It is recommended that the board approve agenda item D. Ms. Marks, would you like to explain this to us?
Mr. Barley and Ms. McFadden have been very involved in our accounts receivable functions, and in order to be able to resolve discrepancies, ensure deposits have been made, get deposit slips, in order to just complete the functions of what's needed. The request is to have them have access to online read-only account activity and credit card activity. We have in our accounts at Farmers and Merchants Bank. It does not enable them to have transactions, but visibility as they need to check and reconcile and provide information and backup information, largely to XED. This will keep us from being behind as well. So not only do they do the work, but have to be able to have visibility into what's been recorded. And again, it's not, they do not have authority. We're not asking that they are able to make transactions and be on the accounts, but just be able to look up information.
Okay. Although, can I get a motion to approve this?
I'd like to make a motion.
May I have a second?
I second.
Is there any comments or discussion?
There is. Should we have Jerry review this?
Yeah.
Well, it's
Pretty straightforward.
a one-page document.
Okay. So it should be pretty quick. But what the only recommendation that I would make is it would say, just as Jill described it, it would say, be amended to say, please grant David Barley and Lee McFadden read-only access to the following accounts, colon, and then there's accounts listed.
Yep.
And I might even parenthetically add, without the ability to make any changes. Jill described it that way, but it just reads a little bit different.
Sounds duly noted. Okay. So do you want to withdraw your motion and then submit a new motion?
I would. So I'd like to withdraw my previous motion and make a motion to approve the letter in the board packet giving David Barley and Lee McFadden as amended. So the line would read, please grant David Barley and Lee McFadden read-only access to the following accounts, colon, and a 3.
Okay. Do I have a second?
I second.
All right. We have a motion to approve the grant of access subject to the modification proposed by Mr. Jackson. All those in favor say aye.
Aye.
Aye. Those opposed? This motion passes unanimously. It has been brought to my attention that the last item on our agenda, which is the LENCOM's lockdown and emergency notification communications by Oak Atlantic, and with Paul Yao presenting, has been pulled from our agenda, which means it is now time.
We actually have we have a message
Oh.
coming from some of our students prior to adjournment. Or we can adjourn and then see the message, but we wanted to end on a positive.
Quick little 1 minute message from our students for you before Christmas, just to end on a happy note.
I was going to be
No.
impressed if you kept them hidden quiet this entire time. This
they're
makes
not-
a whole lot more sense.
Yeah.
All right.
It works better with sound.
And you just face us.
We're going to have RJ do sign language.
Do that.
We're very fortunate. Right?
We figured since there wasn't a chancellor report, we would just give you a nice thank you.
Yeah, that's the part now where we all melt down.
It's a better ending than just
It's
adjournment.
significantly better ending. Okay.
We hope to see more students soon and some presentations of their talents in the new year, because that's the joy of why we're here and an important part of the program. So thank you for getting us started in that direction.
And if we could get that fella who played the ukulele at
That's
SV
me.
last night, if we could get that little guy in here, it's so good. So everybody was awesome.
When they tell you that some kid's going to play the ukulele, you don't know exactly what to expect. And then he just sits there and he just,
Rocks it.
yeah.
Yep.
Yeah. Okay. Now it's time for adjournment. Do I have a motion to adjourn?
Make a motion to adjourn.
That was a quick motion. Do I have an equally quick second?
I second.
Wow, that's amazing. We are now adjourned at 8:19 p.m.
Boom.
Ba-doom.